September 6, 2024. This is the S&P 500 E-Futures Mini on the 2000 tick chart using NinjaTrader 8. What does the chart look like today? It looked like in the pre-market there was a spike. Well, it was a sell-off, consolidation, then a spike up, then this very, very slow but gradual sell-off here. It was quite a move though, because I think total market price action moved 133 points, it looks like. But just this one move from here all the way down to about right here, which happened in about 3 hours, took back about 80 points, and then it sold off, went into this consolidation range. There was a lot of volume today, quite a few setups, also quite some decent setups. Unfortunately, I didn't jump on the two that I marked here with these asterisks. I did take two trades here, and they were both profitable. Then there were some other setups down here, a couple of hunch trades, which I marked with these black arrows. Hunch trades meaning I didn't really log it as an official setup just because it fell short of actually being a true setup for one reason or another. But I had a hunch about them because just the way the price action was moving in context. So maybe these hunch trades will turn into real trades one day when I have more experience and more time with charts to see that these actually work out a specific way. So I can get into the trades right now. Also, there were like, with the price action, there were quite a few like measured moves that played out pretty nicely. So it was a rather interesting day. Probably, I think if you were a little more ambitious or more aggressive than I was, you probably could have gotten a few more trades than I did. There was a few economic data points that came out at 5:30 Pacific Standard, which is this. You can see it's this sell-off, this crazy, crazy spike. This is a hourly average hourly earnings and non-farm employment change, as well as the unemployment rate came out right here. I think there was an FOMC Fed speaker that came out right around 5:45, which is, I guess it maybe caused this rally. And then finally, another FOMC speaker that came out at 8 o'clock Pacific Standard, which is about right here. Looked like he may, I guess you could argue that he may have caused this rally. Now, the FOMC rate decision is coming out in a couple of weeks. I think not next week, but the week after, where most of the analysts are anticipating a rate cut of about a quarter, maybe a 0.5%. So we'll see how that plays out. And usually on those days, usually on the 2 days leading up to it, because the announcement comes out on Wednesdays, but on Monday, Tuesdays, the trading gets very, very slow as everybody just kind of buckles down and gets ready. But at least next week, there's going to be the quiet period of the FOMC, so they won't announce anything and it'll just be regular trading as usual. So let's get into the setups. This is the pre-market. There's this crazy spike from down here, 54.70 to about 55.15. So it's a 45-point move in a matter of 1 minute. Actually, this looks like it was a 30-second time period where these two candles printed so rapidly. So it's a great way to lose a lot of money and also a great way to win a lot of money. But you're just kind of rolling the dice at that point because you don't really know how the market's going to take it. Okay, so the first setup I see is right after the break and the open. Let's see here. Let me pull up my notes. Okay, so right now prices are moving up. I found this orange up channel, which tested pretty nicely and contacted twice. So there is a little cut through here, but there's also this big spike. So I kind of discount this gigantic wick. And there was a small overshoot here, but it didn't really mean anything. So I kind of left it alone. It wasn't even very decisive. The first setup I saw was right here. It creates a new high. It's a first entry long pullback, second entry long. I thought this was a possible trade because up until this point, the EMA has been holding pretty strongly. There was a violation here, but it's kind of the recovery period after this crazy spike up. Because this is only within 3 minutes, all these candles printed. Then there's a small violation here and another one here. But for the most part, you could say that it's a small breakout here and a decent sized candle here because it's a touch bounce off the orange up channel. Signal bar is pretty decent. It engulfed the previous bar. So I'm thinking first entry long, second entry long, enough room to the EMA, worth a trade. But this is rather early for me. It's only 4 minutes after the open. So I didn't, there's a lot of momentum going for it, but it's also very early in the trading day. I would rather just wait for another kind of setup. I think I would have taken it if this violation wasn't here and the setup was even more bulletproof than it was already. So break of this orange up channel, flushes down, kind of reverses, and this is actually where I take my first trade. So you see this green up channel going up. It's a break. It's one attempt up. Technically, you have a second entry long here, but I saw it more as a visual first entry long, pullback, second entry long. Now, yes, this is where your second entry long is formed. I kind of gathered it as one because I saw it as technically it would be a third entry long, but I like this setup because it's a break of this green up channel. It made one attempt right here, but I thought this was a more decisive attempt when it came down and reversed strongly, not quite off the EMA, but it kind of reversed strongly. I thought there was enough momentum for a quick scalp, and that's what I took. So I actually entered one tick above here, and it pushed up, came back down. This candle closed so quickly that you would think that after I entered here, I would get filled on the same candle, but I'm not exactly sure. I wish I had recorded this. It went up. I don't know if it skipped my trade or not, but when this candle opened, flushed down, it filled me. Then it quickly flushed up and got my runner before I even had a chance to move my runner. So it was a very, very quick, rapid trade. Timestamp. Yeah, I'm not really sure what happened, but it was just a very, very rapid trade. Then prices continue moving down. So it broke, tested the high. Uptrend may have played out. I'm thinking one leg, push up, and this is where I marked the potential second leg coming down. I don't see another setup until I get to about right here. So here I made two legs down. Now I'm going to say that this second trade is a little aggressive. So it's a break of this orange down channel. I'm expecting a test of the low. There's also this green up channel. It broke, and it had already tested the high of the green channel after the break. So you see this broke, clearly closed outside, push up. This is uptrend may have played out. Downtrend still in play because it broke, made one attempt down, second attempt down. And seeing this in real time, I like the fact that it moved one tick up and flushed down. EMA is starting to show some kind of resistance. I'm going to admit it is a little aggressive because the two legs down have played out. This big orange up channel may or may not want to test its high. The reason I wasn't thinking it was necessarily going to test the high of this orange up channel is there's already been two legs down. The pullback is already too large. Move halfway past this, that perhaps I'm going to be range bound. So it was creeping into my mind, but I like the signal bar. I entered one tick below, and then I quickly got filled. I moved my runner to 1 point below break even, floated, and it finally took me out here. So I was hoping for another flush down. It creates a lower high here, and this is also a possible trade if you miss this one because it is first entry short, second entry short, lower high. The reason I wasn't too excited about it was it feels aggressive. EMA is still holding prices down. It moved up two ticks, then flushed down strongly and made a matching low. Well, it closed a little higher. What would have been really great if it closed at the low. The thing that was holding me back was there's clearly maybe some kind of support from the measured move that I wasn't sure I had enough room to cleanly and comfortably scalp out. So it definitely left it alone, but if you're more aggressive, I think the trade would have been there. Looked like it would have worked, and it started just moving down where I find this other orange down channel. Prices keep moving. It creates this second entry short. Second entry short, I kind of went back and forth, and I considered it an almost trade. Because at this time, it looked like it was consolidating. We have some kind of resistance here, and maybe some kind of support here. But I saw this as a failed breakout push up. I thought it might have been a failed breakout pullback, and it was a first entry short, second entry short. But the second entry short, there isn't really any more room to localize low. You only have one tick left. So when you see this in real time, unfortunately also, there's too much wick here. If this had closed maybe right here without this big wick, I actually still think it's not worth taking a trade just because even though you have one tick up and engulfs the previous candle, which I really like, there's no room to scalp out. So it feels a little dicey. So I called it an almost trade. Turns out it would have worked out pretty well though. And this actually sets up for a really nice possible trade right here. Unfortunately, I didn't take it. So I have this orange down channel drawn. So this is one move down, another move here. This big red channel doesn't exist yet until later. This down trend, this trend line resistance does exist, but it doesn't really help at this point. It's all one leg up, pull back, second leg up. And here it creates a second entry short possibility. Let's say one leg up, pull back, second leg up, potential measured move has been made. Maybe it's going to have a rejection here. So I saw it as first entry short, pull back, second entry short, close right at the EMA. Everything would matter on the next candle. And I thought it was a worthwhile trade. You would have entered, or I would have entered probably at the lows here. would have opened, ticked up, probably filled you, and then flushed down. There was also enough room to the lows. As to start breaking out of the orange down channel, starts moving down, and this is really, really tight trading, far from the EMA. Doesn't feel safe. Prices continue to move, and I was thinking of trying to fit some kind of trend channel here, but nothing really quite fit nicely as one big one, so I was playing off these smaller trend channels. And this actually sets up for the second really decent trade. So it's coming down, it broke above the EMA. It looks like it's faltering here. It's a new low, first entry short pullback. This creates a second entry short that's confirmed here. I like this trade because even though the signal bar is a little iffy and it closed above the EMA, let me zoom in. This candle is the trigger candle. It moved up one tick, decisively engulfed the somewhat mediocre signal bar and closed at the low. I also like that this small little correction broke and already tested the high on this signal bar. So not only is the signal bar bearish, it also closed, you know, outside here, making a new high. And then this is the trigger bar. If I were to take this trade, I think I would have put it, in this case, pretty much one tick below here. And it would be depend on this next candle whether I would get filled. So here, one tick below is right about here. I think you would have gotten filled here because it's 54, 58, 20, 50. So you'd be 54, 58, 25. So it looks like it would open, you'd get filled and then flush down. Plus there's enough room to the lows. And it would have worked out nicely. Also, if you had a runner, it would have been pretty nice to trade and take this runner with you. This is what I call a hunch trade short, because I saw this as a new low, first entry short, second entry short. Second entry short, I wanted to touch and bounce off the EMA and a flush down, which it did, but it didn't really touch the EMA. It's a decent setup. There is just enough room to scalp out comfortably. I mean, there's more than enough room for the 1 point scalp, but I usually like a little bit more room. Plus, you're pressing against the low of day. But when I saw this, I felt like there was a short trade possible. But I also was wondering, could this have been already a failed breakout here? One attempt down, second attempt down. Is it going to push back up to there here? I wasn't sure, so I left it alone. Kind of consolidates and it starts drifting downwards. So yeah, at this point I was thinking, okay, maybe there was a failed breakout there, but maybe actually the trading range might be slightly lower. Not trading range, trend channel. Prices then continue moving down because it fits really nicely here now. This is just very tight trading. I'm trying to avoid this. It reverses. You have a first entry short, second entry short, technically a second entry short failure, but it's just too tight. Prices move up. This is right around when the economic data, not economic data, FOMC Fed president is starting to speak. I think it was Fed member Waller started to say something and it caused the market to rally up. No way to really get on that or predict that this is what had happened because easily it could have just gone the other way and just sunk hard. This red trend line was one of the many that I had. I'd since deleted other ones. It looked like it was touching, touching, and touching. So I started to believe that this could be a possible channel. Unfortunately, there's not enough, I guess, enough information. You'd only use it as a key entry point for going short, which is good because the whole day things have been going short. Looking for a bounce is a little iffy because I don't really trust this off of just one touch at this point. I mean, you could argue maybe it started back here, but it's just, that's kind of a reach. And prices continue moving. So you do have a new high, first entry long technically right here, second entry long, maybe a third, but it didn't really bounce off the EMA, no real setup here. Don't really like what I see. And unfortunately, there was no way to get on this, in my opinion, very safely. Prices move down. This is what I call a second hunch trade to go short. Excuse me. Okay, so let's see. The second hunch trade here, it is a second entry short, new low, first entry short, second entry short. I didn't really like this because it was two big green legs up. I did have this drawn, so it could be a rejection. I just wasn't that hot on the wick right here. So I think to reduce the risk, you probably would have, maybe placed a limit order up here. It would have opened and flushed down. So I felt something like that was going to happen. Wasn't too sure on my read, so I kind of left it alone. Prices then continue moving down, kind of consolidates, well, not consolidate, it breaks the green channel, tests new high, and comes right back down. I'm thinking this yellow down channel wants to test the low. If you look at this, there's probably one clean, distinct leg correction and another leg. But within this big secondary leg, there's probably going to be some swings like this. Wasn't the cleanest, but I'm thinking more likely, since it's just been going down all day, maybe with this bump up from the Fed chair, not Fed chair, but Fed president speaking, most likely you just want us to keep going down today. So I'm just looking to go short. This is just too spindly. Bodies are small, big wicks on each side. Starts moving up. I find what I think is this purple up channel because it looked like it had one touch, two touch confirmation. Confirmations at the top look pretty decent. Creates this lower high setup. I call this an almost trade because it looks like it's two visual legs up. Break of this yellow down channel. I have a 4,000 tick chart that I also follow. And it looked like it was one leg up, pull back, a second leg up. And it looked like it's looking to test the lows here. So it had a push through the EMA. Looks like it's first entry short, second entry short, potential lower high here. I call it an almost trade also because the signal bar is kind of big. And I'm not sure if this purple up channel at this point in time is actually going to act as a resistance because it went from lows to highs, back to lows, back to highs, back to lows with a bullish bias. So the next candle could easily just, maybe tick a little bit below, get my fill, then reverse back up. So there's not enough information, in my opinion, to take a safe trade. But then it sets up this failed second entry long, which I also feel is a little bit more of an almost trade because a first entry long pullback, second entry long. Second entry long, it's nice that it ticked one tick above and it engulfed the previous candle, but I didn't like the close for this type of setup. I needed something a little less risky. To make it less risky to reduce risk, I needed the close to be at the bottom, a decisive push down. But as you can see, there were some buyers that came in and pushed from the lows back up into this close line or into the line where the close is. So you do have this wick. So that gives me pause. So I'm not really sure if there's going to be a fail breakout and be like one leg down, push up, second leg down, and then this might be reversing to test the high of this very unsure purple up channel. Prices then continue down, breaks out of this orange down channel, comes back, tests the low, and it just has this spindly price action. It's kind of consolidating, creates a fail breakout here, and this is actually where I thought was another trade here. Now I went back and forth on saying whether it's an almost trade or a possible trade. For me, I think it was probably a possible trade, but maybe, well, let me take that back. I think it was an almost trade because if it was a possible trade, I think it would have felt a little bit more better about it. Creates a new low of the day, creates a first entry short pullback on the same candle here. It ticks up and then flushes down. So it creates a second entry short, or you can consider it a lower high and a potential triple test because you'd have to kind of take this as the attempt up, second attempt up, fail breakout, and then another attempt up. The thing that was stopping me was after the break of this blue up channel, I don't know that it made one test down, comes back down. Next couple of candles, what if it tries to push up to test this high? So that kind of gave me pause, but the overall bias is short. So I called it an almost trade because I just wasn't too sure about it, but a person with more experience might see like, oh yeah, obviously it's more biased going down. And that's exactly what happened. Kind of consolidates and moves sideways. Breaks out. I'm thinking there's a fail breakout here. There's technically a new high, first entry long, second entry long here, because you also have a new high here, first entry long, second entry long, count resets. Top of the range, comes back down, fail breakout. Most likely it might want to push back up, but here it's proven raw and it just continues downwards. This is another hunch trade that I saw in real time, but I'm not sure what to make of it. There's a new low here. It's a first entry, first entry short, pullback. It creates a second entry short here. And I thought maybe it's like a first entry long, creates a lower high. This pushed up, looks like it's trying to make an attempt up. And when it flushed down and closed below the EMA, I couldn't justify taking a trade or really understanding if there's a trade set up here. But I thought there was momentum to push down, but what was stopping me was there's potential resistance, potential support right here. So I had to leave it alone. Pushes down. So now this red down channel, actually this red trend line at the time, fits pretty nicely because confirmation touches rejection, rejection here. So anytime the prices come back to here now, I'll probably be looking for a short. And then the bottom where the support of this red down channel was, briefly there was an idea that maybe it's up here, but this dwell outside was too long. And the only way to make it fit would be here. But since it's a bearish day, if it ever comes back to here, I don't know necessarily that I'd be looking for a bounce just yet. It had to be a pretty clean setup. So it's just more trusting of the resistance as opposed to the support of the red down channel. Prices consolidate. Again, it hits this red resistance down channel. Then it finally breaks up. And I see this as a new low. It's a first entry short, pull back, second entry short. Again, it kind of sets up an almost trade. This is a very, very strong decisive rejection because you have one leg up, pull back, second leg up. So two legs up. Hard to know for sure that it's going to push back up again. So I was waiting for higher low confirmation. It could be maybe moving back into range, but this is the long dwell time with respect to the size of the range. You already had a breakout here, and every time it broke out, except for this one, it's making lower lows. So whether it comes back up with enough momentum to touch the highs, I'm not sure of. So it's almost trade. I do like the signal bar, but even to the most recent one here, you have just 1 point. So you want to enter and hope that it pushes and exceeds here. I just wasn't really sure about it, so left it alone. Looked like it would have worked though. Pushes up on this yellow up channel, and it comes back down. First entry long. Technically, they have a second entry long here, but it looks like it's all part of one leg. It breaks out, tests the low, starts reversing. I saw this as another kind of a hunch trade, but definitely not anything to take because I only really marked it after I saw this big move down. Because when I see this candle in real time, I'm not thinking of short just yet because it's an inside bar. You do have an overshoot here. It could be the matching overshoot here. So here, it could want to test the highs. But when it happens like this flushing down, there was no real way to get in on this unless you just anticipated the move. You see like a new low, first entry short pull up, one tick above, and then a push down. So you'd have to enter it on the engulfing because after this bar closed, this is a 6-point candle. That's like 24 bars, 24 ticks. That's just too big a risk. But it did close very strongly. And if you just try to reduce risk by putting your entry way up here, I'm not, so clearly you wouldn't have gotten filled, but when you're asking for the price to move back so much before it reverses and goes in the direction you want, it feels dicey because if it recovers so much, there's a chance it could just spike up, take you out, and move back down. Plus, in this case, your stop wouldn't even be up here. It had to be way up here. Be for sure, not going to give yourself the correct risk, you know, understanding that it's not likely going to push all the way up here. But if this candle is forming and you put your stop here, the life of this candle, it hasn't closed yet. So it'd be risky to put your stop here. So this is just I don't even know if it's a hunch trade for sure because I really didn't have a hunch on it, but I just noticed it and I made a note to myself. Then it creates another setup here. It's a second entry short. This one here seemed like there was some kind of support resistance. I put this as the low of day, which it was for a while. And I saw this as a new low, as a first entry short pullback. This is kind of like a hidden second entry short, but it hasn't confirmed yet. Here, now you have a second entry short that's confirmed. It's a break of this orange down channel, push up, and you're expecting prices to move down. It made one attempt here, push up. It could be making a second attempt here to test the low. It's also a break of this green up channel. It broke out, already tested the high. So I had this as a trading range potentially, but I didn't give that much trust to it. So whether you're at the high of the range or not, it's a little hard to tell, a little premature. I did like that it closed below the EMA, but you don't really know it's a confirmed second entry short till you get this candle. By then, it's just too late. You don't want to enter here because there's not much room left. And you could be seeing easily a push up, pullback, and a second push up before maybe it tests the low here. It kind of consolidates. moves sideways, pushes up. It falls into what I think is orange up channel. No clean second entries here, or second entries I could trust. You do have a second entry here. It's a bad signal bar. Pushes up, breaks out of this trading range. Fail breakout here. Technically have a new low. First entry short, second entry short. This is a good signal bar to go short on. And then when you see this, I wouldn't be ready to take an entry here. So when you see this, then I'm thinking maybe there is no trade here just yet. And then by the time this candle forms and closes, unless you jumped in on the engulfing, I mean, there is still enough room to the EMA and you could claim the fail breakout, but I would have just abandoned the setup. Plus, time of day, there's only 30 minutes left. In respect to my two winning trades already, I wasn't prepared mentally to try to risk something on a setup that I felt was a little mediocre because you have a second entry short above the EMA. So second entry short looking for a failure above the EMA, meaning you want to go long, but in this case, you're thinking of going short. Second entry short above the EMA to push it back down. Maybe, but it just felt a little dicey. You do get a lower high here, and I was hoping for a cleaner close. But by then, it's already entering the last 30 minutes, so I'm a little more conservative. Prices kind of consolidate here, and clearly here in the last 15 minutes. And right from here to here is the last 10 minutes on a Friday. After already having two profitable trades, I'm not ready to risk anymore giving any money back. So kind of left all this pretty much alone, but just watched it from the sidelines. So it was a rather interesting day, quite a few setups. These two that I pointed as asterisks were unfortunately trades I didn't jump on. So let's see. This one here seems like a pretty decent trade. Two legs up, clearly in this channel coming down. And this one would have had, if you had a runner, would have been really nice to kind of chase it down one tick above. And if I'm playing my strategy, I'd probably be able to take it all the way down to here, roughly, before I got taken out, because I just probably follow it one tick below. And then here, first entry short, second entry short, another possible trade, because I would have entered here on this candle after, it broke. So I would have entered after this one closed, entered one tick below here, probably gotten filled here, and I'm not sure I would have gotten a runner. I probably would have gotten taken out right here pretty early. So overall, a pretty interesting day. A lot of price action, a lot of volume. I anticipate next week will be, well, I'm not really sure what's going to happen next week, but compared to what happened yesterday, another sell-off, but it was a little more choppy. This one's a very decisive sell-off and then a consolidation into the close. So hopefully that was helpful.